We have a great question here from Kerrick, who asks how we can know when we should be trading something in line with its medium term or fundamental bias, and when it's a good idea to try and trade it against that overall fundamental bias in line with the shorter term market sentiment. So this is a great question, Kerrick, and there's a couple of things that you can think about when making this decision. I think the best way to explain this is by looking at a recent example of the Aussie versus the US dollar, where we have recently had to make that choice of whether to wait and buy in line with the fundamental bias or sell in line with the short-term sentiment, which obviously went against that overall fundamental bias. Now, taking a look at the pair, there was a couple of catalysts that had pushed the currency pair higher in line with that fundamental upside bias for the Aussie dollar versus the US dollar. We had the RBA coming out on the 3rd of November, which came in exactly as expected with the easing measures and basically failed to outdove the market's dovish expectations. And there was also some initial chop with that US election rigmarole that ended up being very positive for risk assets in the end, and that pushed up the Aussie higher while the US dollar went lower across the board. Then on the 9th, so when that happened, we basically broke through key resistance at that 72 psychological level. And then we started to grind higher. And then on the 9th, of course, we had that vaccine news coming out from Pfizer, which further pushed the market higher into key resistance areas. So the upside bias was intact, and we were simply looking for a pullback into that prior resistance area to re-engage to the upside, or buying back basically in line with that fundamental bias. Now, on the 11th and the 12th, we saw some risk of sentiment coming into the market, which could have provided an opportunity to short the Aussie dollar in line with your question. Even though the fundamental bias was still higher, we were expecting a little bit of a pullback and waiting for one to occur to get back on the long side. So how do you decide in that situation whether to just wait for a pullback and buy at better levels with that fundamental bias still intact, or whether to try and take a, sorry for that squawk, or whether to try and take an additional opportunity to the downside, to the short side, because we are expecting one to occur to give us an opportunity to basically trade in line with that overall trend. So how do you know to take advantage of that risk of sentiment? So there's two things that you can look at in any situation like this, namely conviction and timing. So we'll look at each of them individually, starting with timing. The timing of the trade is very important from a time horizon point of view, and it comes down to just the basic balance of probabilities. Is there a higher probability of the market moving higher or lower from that level based on the timing? So for example, in the case once again of the Aussie versus the US dollar, we didn't really have timing on our side to re-engage this from the fundamental upside bias, because at that time we were testing a key resistance zone for the Aussie dollar versus the US dollar. And at the same time, if you take a look at across asset classes, we were also testing key resistance in a couple of equity futures markets. We were testing key support in the US dollar, and we were also testing key support in the VIX, which means that, you know, after that solid run to the upside, taking a look just across asset classes, the timing rather favored a move lower in the short term before resuming that trend higher. So the timing wasn't right to buy in line with the fundamentals, but it was right, the right timing for a short trade against that trend, given the same reasons. So a higher probability basically for the market to move down. So with the timing, that is where your technicals come into play a lot, right? Apart from that, also looking at things like the overall market conditions, you know, are you awaiting key news events coming up? All of those types of things, cross asset class volatility, cross asset class or intermarket movements, all of that obviously coincides with the timing of the trade, which might either, you know, create a bigger opportunity against the trend, just as some mean reversion, or whether we have an opportunity to move back in line with that trend. So timing is the first one to look at. The second one then comes down to the conviction. So in this case, like we said, the timing was correct. We anticipated a move lower to basically re-engage from a better level. So we're already anticipating it moving lower due to the timing, due to the volatility at the time, due to the resistance areas and support areas reached on key asset classes. So timing was in our favor for a move lower. So the second part then is the conviction. Now the conviction you have basically comes down to the reasons that the market has for moving at that time. What catalyst has caused the short-term sentiment to shift against that overall fundamental bias. Was it a very significant driver, or was it just a minor hurdle or a bump in the road? Now, this step is important because it allows you to establish whether the short-term reasons to trade the asset against that underlying trend or bias, whether it's worth it from a risk management point of view. So just because your timing might be right in this case, which it was to the downside for a move lower, just because the timing is right and you expect it to move lower doesn't mean that it's a good idea to necessarily sell it against that overall bias from a return on investment or return on risk point of view. And that is really where your conviction comes in. Now, with the conviction here, I'm not talking about how you feel about the trade. Our feelings about the trade shouldn't have anything to do, any bearing on how we make that decision. It's more about how convinced we are that the reasons that the market has for moving lower is good enough for me to actually take a chance and trade it against that overall strong upside bias. Because remember, if the bias is still intact, the market doesn't necessarily need a reason to move lower. Just because, from a timing point of view, it seems like it's a good idea. It can take any type of minor pullback as an opportunity to simply just resume that trend to the upside. So we do want to make sure that conviction is there as a reason to move lower. So once again, in the example of the Aussie versus the US dollar, even though timing for the move was favoring a move lower in the short term, we didn't have the conviction or reasons for short-term downside, providing enough reason for us to short it from that resistance area. So even though we were waiting for it to move lower, the minor risk off turns that we saw at that time in the market just wasn't a good enough reason to trade the Aussie dollar lower against the overall trend, because it could have resumed that trend at any moment. So when both of those don't line up, in my opinion, it's best to just wait for the market to then play out those ebbs and flows into better levels for you to re-engage the market from that overall bias. Now, contrary to that, for example, let's say the reason for the move lower, let's say we saw a quick move lower, and the reason for that was trade relations between China and Australia massively deteriorated. So China adds massive tariffs on Australian iron ore, for example. That would be a good reason to trade from a conviction point of view as well. So we have the timing on our side. Now we have the conviction that the market will look to reduce some of that long exposure and force the market lower. And that'll be something that could have more legs to run to the downside if it was significant enough. So those are the two things that I would look at, and I normally look at, Kerrick. The first one is the timing right for that particular counter trend move? And if it is there enough conviction? Is there enough reason for the market to be trading against that bias at that particular time? So I hope that helps with the question. Any others, as usual, please don't hesitate to let us know.